Let's go finally to Ocado, which is a UK-based online grocery retailer, founded not so long ago by a bunch of Goldman Sachs bankers. For a long time, people have been saying, oh, well, Amazon's going to come in and buy them, but that hasn't exactly happened. £1.84 billion. Price to earnings ratio, it says here 161, not a dividend payer. Let's have a look at the chart. Again, as I said, only listed for a shorter period, so has looked okay and moving in the right direction. And I don't know though, I mean, it's a little bit competitive.
Yeah.
We've got UK grocery sector very, very competitive with Tesco, with Morrison's, with Waitrose, with Marks and Spencer's, all going after it.
All these guys are online. So
although these guys deliver for Morrison's and some other players,
yes,
they own
they
distribution centres.
But the Morrison's part of the business is only 8% of their income. So these guys are purely online. They don't have their own bricks and mortar footprint. They use Morrison's as their bricks and mortar footprint.
Yeah.
But 92% of their sales, as I mentioned, generated online. The issue here is, okay, cool. So they've got great technology. They've got a great platform. And that's probably where most of the value...
Online, mobile app, they were leaders in that.
Yes, so that's probably where most of the value in this company lies. But they can't get to an operating margin above 1%. That is very, very low, even for a food retailer. And as long as they struggle to actually make this business profitable, it's going to be very difficult for me to see a reason why I should be a long-term investor.
I mean, we didn't talk about it when we spoke about Amazon, but they're getting into groceries because they know groceries are a big revenue category within consumer spending. The thing is, though, most people like to kind of select the items. Well, I don't know, maybe they do. Like some things you do, like your Avo, but you don't need to press the side of the cereal box.
Exactly.
So now, but the thing is, low margins, very difficult to kind of get the fulfillment model scaled.
And in the UK, margins are especially thin in grocery retail. It is very, very competitive. Amazon's been very clever with Whole Foods because Whole Foods caters towards a higher end consumer. These guys are less price sensitive and margins are a little bit thicker. And you don't want to be in a business where your margins are like this and the rest of your business has big margins
and the problem for
suddenly
everyone
just compresses
else is
everything.
that Amazon has so much money and so much energy that it will run a grocery project for 5 years trying to work out how to do, you know, like pick up locations or sort of out of warehouse, mini warehouses close to people's homes, or trucks or big trucks or small trucks. Meanwhile, everyone else is getting fried.
Yeah, and I think the best thing for Ocado Group actually at this point in time is to really try and monetize the technology that they use and kind of sell their IP to an Amazon or an Alibaba or a JD.com, who's actually also going to groceries right now. With
okay, good. So you're going to go hot, not hot on Ocado?
Not hot in its current form.
Yeah, okay. We'll follow that one as well. Right, there you go. So those are our investment cases.